So everybody's up in arms about the new LLPA, and I've heard some people try to describe it, try to explain it. I've had some great people also in the mortgage industry who have done some fantastic jobs. Shout out to the mortgage mentor, shout out to that one Ginger. She does an awesome job on VA loans as well. Shout out to all the other people that I've downloaded and reposted your content and tagged you in. Shout out to Mortgage Mandy as well for explaining it. If you are listening to anybody who is not a loan officer and is not a seasoned loan officer concerning anything concerning mortgages, and then just running along with it and getting angry or upset, you're doing yourself an injustice. The fact of the matter is the news is getting it wrong. They're not doing their research. They're not doing their investigating. And unfortunately, the general public isn't either. And we all have access to it, in the palm of our hands through our cell phones and things of that nature. So number one, we've known about this since January, February. Any of us who get the updates from Fannie and Freddie, any of us who get the updates from all the sources that we should have known that these changes were coming into play. And the reason why the alarms weren't sounded at that point in time is because the changes, while they're not great, they're not horrific either. And the problem is that the average person doesn't understand a basis point. They don't understand loan level pricing adjustments. They don't understand credit versus cost. There's a lot of things that go into it when we're setting things out. The things that you're seeing are not changing the interest rate itself. It's changing the cost of the interest rate versus the lender credit that you might be getting for each individual interest rate. It's changing the basis points, not the interest rate, the basis points. So all the things that you're seeing about how it's going to cost you $40 per month, it's not even remotely how that works. Contact your loan officer or a loan officer who knows what they're doing. And if anybody says that they are a loan officer, if you look, you'll see my NMLS is everywhere. Loan officers have to put their NMLS everywhere, and even better, you can go on the Consumer Access NMLS and see who we are, if we're state licensed, if we're federally licensed, how long we've been licensed. You can see what we did for the 10 years before we became licensed. That's how you verify your loan officer, and all you need is our name. So, the news reports for the 40-year purchase mortgage drove me insane in the first place, because anybody who did 2 seconds worth of research knows that wasn't for purchase, that was for loan modifications. And that specific thing is actually a good thing, because after the housing crisis of 2008, we saw a lot of loan modifications that didn't have any barriers. They didn't have any structure. So I had a gentleman who had a 2% interest rate after a modification. Great, that interest rate's awesome. He got pushed into a 45-year mortgage on top of the 10 years he had already done. And at the end of that 45 years, he had to pay another $60,000 in order to pay off that mortgage. This 40-year modification on FHA loans makes a structure of you can't go past this and you can't do super crazy things. It's a good thing. Now, onto the LLPAs. No, if you have a better credit score and a higher down payment, it's not hurting you the way they're reporting. And on top of it, like I said, it's been in effect since, kind of since January. It all depends upon how long that lender thinks it's going to take before they sell the loan in warehouse. And this only affects conventional mortgages. It only affects conventional mortgage. And a conventional mortgage is anything that follows Fannie or Freddie guidelines. Doesn't mean it absolutely has to be sold to Fannie or Freddie, and you will never know who buys your mortgage on the secondary market, because that's an investor who frees up funds for that lender to lend more money. I had one woman who was trying to tell me, they said they never sold their loans. They don't sell the servicing rights, which is who you send your check to. That's not the same as the investor who paid back the lender who originally lent you the money, so that lender has more funds to lend. It's very complicated, but let's get back to the topic at hand. Your loan level price changes February 6th to February 20th. If you had a loan that was locked for 60 to 90 days, this was already in effect for you. From February 21st to March 7th, 45 all the way to 90 days. This already affected you. March 8th, doesn't matter if I locked you for 15 days, doesn't matter if I locked you for 30 days, you were affected by this already. It's already priced into your loan. It's already there, because again, we get the information as soon as it's released, and therefore it has to be priced in based on the time that they think they're going to sell it on the secondary market. Here's the actual chart. What everybody else has been posting about has been the heat chart for where the changes are. And the changes themselves are actually right in here. And this is how it's overall affecting. And again, these are basis points. This is not interest rate. So you're seeing the percentage, but that's not the percentage of the interest rate. That's the basis points and how it's going to affect the pricing of the loan. So this is going to affect how much lender credit you get versus how many points you have to pay. It's not the same as when you're looking at the interest rate changes, not by any stretch of imagination in any way, shape, or form. Funny thing is, all of us have noticed since around beginning of February that Fannie and Freddie, when we go to run AUS, which is the automatic underwriting system, is pushing you more towards FHA loans, where this is not a factor in any way, shape, or form. I had a client where this wasn't their first home purchase and they were a high income earner. And unless she was putting down 20%, she was not getting the house. So we had to wait for FHA to be available on the property she was buying. So there's a lot of different things that are going on behind the scenes. And the media is amping up all sorts of crazy. And nobody's doing additional research in order to find out about it. PA waivers, home ready loans, not affected. Loans to first-time buyers with qualifying income greater than 100% of area median income or 120% AMI in high-cost areas. Not affected by the LLPAs. Loans meaning duty to service requirements, manufactured housing, rural housing, Native American tribal lands, loans originated by small financial institutions, affordable housing preservation loans, loans financing Energy Star certification, improvement loans with shared equity are not affected by the LLPA. So first-time home buyers, guess what? This doesn't affect you in any way, shape, or form. If this is not your first home, if you are buying a second home, if you are buying an investment home, this is definitely going to affect you. If you are a first-time home buyer, these changes are not affecting you in any way, shape, or form by any stretch of imagination. There's also LLPA credits, housing counseling, $500 credit, home style energy, $500 credit. Refi now loans. If appraisal was obtained for the transaction, loan was delivered without an appraisal waiver, you get another $500. Loans on home path properties. If an appraisal was obtained for the transaction and the loan was delivered without an appraisal waiver, you get an extra $500. And again, this is the Fannie Mae guide. There's another one for a Freddie Mac, all similar information all the way through. The problem is that it's easy for us to, read the headlines and think the news is doing their due diligence, and they're not these days. We have to take the extra step to look into things. If somebody's telling you about a loan and they are a realtor, find out if they've spoken to their loan officer about it. Because I have a lot of great realtors, and when they hear something like this, they reach out to me. And they reach out to me because they know I'm going to explain it in a way that makes sense. If you see something on the news and they're interviewing a realtor, I love my realtors. They don't know loans. They're not supposed to know loans. You need to contact a loan officer to get the actual details and how this affects you specifically. Again, all this really does is get rid of the cheat code that used to be there. This only affects conventional loans. This has a lot of waivers to it. And is it good or bad? Everything's either good or bad. Everything has both. There's some ways that it's good. There's some ways that it's bad. So see mortgagasupport.com. Mortgagasupport.com. I am generally in a live Zoom room Monday through Friday, sometimes on the weekends. You are more than welcome to log in anytime that you want to. Ask for me. Ask for Shelly Prunkle. Obviously, I can't push these out correctly because I'm a weirdo. And I'll explain it to you in person, live on Zoom, and show you the rate sheets and how everything adjusts depending on where you go through. Any loan officer worth their salt is going to play around with different scenarios to figure out how things are going to benefit you the most. But unfortunately, our news outlets are not doing their research. Unfortunately, there's a lot of people getting very angry without just doing a simple Google search in order to find out details from a different source or looking these things up. Fannie and Freddie constantly send out bulletins and let us know what's going on. The VA does as well. FHA does as well. And any loan officer worth their salt has already seen this back, and none of us forget about it because it's really not that big. Now, the one thing that is getting us a little concern is the adjustment that they're planning on making for debt to income ratio. That's a big one that's currently on hold, and NAR and also, the mortgage industry itself is trying to kind of fight that back because that's going to be harmful. That's where you're going to see a big issue. But for right now, that's on hold, and we'll see how that all plays out and if it gets adjusted. If you have any questions, there's my phone number, there's my email address. But again, that one gender, the mortgage mentor, mortgage Mandy, a couple others that I have reposted over and over and over and over again. We're all professionals who do this for a living, and we know how to explain this to you that's going to make sense to you specifically and tell you how it's going to affect you specifically. And that's who you need to get the information from. It's not as big of a deal as what the news is making out to be, because, clickbait is a beautiful thing. It gets everybody's attention, and the amount of reposts of bad information has been driving me insane. Look deeper. Please look deeper.